Stock market today analysis for October 31st, 2021. The Nasdaq is down by 1.3%. S&P 500 down by 0.74%. U.S. Treasury 10-year yield up by 7.5 basis points. Gold down by 0.49%. Bitcoin down by 1.43%. And oil is down by 1.91%. Still have some earnings going on this week. If you want to stay on top of the earnings, an easy place to check it out is at stocktwits.com/earnings-calendar. You can go out as far as you want, a lot of data. You can see which stocks are going to be reporting after or before the market opens, and that makes it really easy. Look at this, 342 stocks reporting. There's different ways to interact with earnings reports depending on what type of trading you're doing. For example, let's say you're going to be in a long-term investment. Long-term meaning you're okay with, you want to own this the rest of your life. Well, you're not going to do anything during earnings report. Maybe if the stock drops a whole lot on earnings, maybe you're going to buy some more, but let's say you don't want to buy anymore. You're not going to do anything. Earnings are going to come, earnings are going to go. You might not even pay attention to it. Now, let's say if you're a day trader. If you're a day trader, maybe you're going to trade earnings. Maybe you will trade earnings. Day trading specifically, opening and closing the position in the same day. So maybe just wait to see what's happening. Now, swing trading, a little bit longer term. Generally in swing trading, it's good to minimize or close your position before the earnings report comes out, because the earnings can really gap up or down either way. Whether you're swing trading stocks, swing trading stock options, it's good to either just close out those positions or really reduce down. Another thing that you can do, so if you're going to do that, let's say you're going to reduce down or close out your position, you want to start doing that maybe a couple days ahead of time, because they could report early, they could do all kinds of things. So you want to stay on top of it. The stocks that you're trading, you want to, depending on how you're trading them, you want to know when they're reporting and be proactive about that. Now, let's say another way you can do it. Let's say you want to do earnings plays specifically on a specific stock. Well, depending if you're going to do straddles or strangles or whatever other earnings play you might do, there's different ways to approach them. So you want to approach them accordingly. So being on top of earnings, knowing when your stock is going to report, and knowing how you should proceed given your particular strategy with that particular stock is a good way to do it. So you can check that out here. The volatility index, the VIX, up by just, I guess, a little bit, but overall, let's take a quick look at the 6-month chart and we see down, right? So the VIX has been going down. It was up here around 30, and we're going a lot lower so far. Different type of looking at fear in a different way of actually looking at risk. The MMRI closed out at 281.80 today, so it's closing up. But these small little fluctuations, I guess they matter. But here, I started graphing this August 29th. So I think this is what matters the most. August 29th, we were already in the high level of risk. We were in the low 200s. So when I started graphing it, we were already in high risk, and now we're moving up towards, we have been moving up towards extreme, and I think it even hit extreme for a little bit. So look, using this as an indicator, you should proceed with some caution. Okay, this is showing that there's less fear. Maybe there's less fear in the market. However, based on this, there's an elevated amount of risk. We see that all the bonds were up across the day. Maybe not up by a whole lot, but nonetheless, they were up. S&P 500, a lot of selling volume, kind of that has doji candle going on, and you can see a higher amount of the shadow to the upside. So that wick to the upside is a bit longer than the wick to the downside. So not only is it red, showing us something bearish, but it's also bearish on the candle where this actual design, how it ended up. Opened here, closed here, but traded this high up here and wasn't able to stay up there. Selling pressure pushed it down. We still have the amount of money flowing out has been reduced. Not enough money flowing in to turn it green, but it's kind of in this in-between world. And that weekly stochastic is moving up. The technology sector, XLF, we're seeing the same picture on the Pro 2 chart, and we're seeing a similar picture on this daily chart. However, we got a longer tail to the downside than we do on the upside, and we're hitting this 50-day moving average, and right now the technology sector is on the tail end, on the bottom of that 50-day moving average, not breaking above it. Healthcare. Healthcare, we've been green for a while. We got the strong trend of the weekly stochastic moving up. We're above all three moving averages. We opened and stayed above all three moving averages today. We're in the top 50% of this big candle. However, this is not a strong sign. It's not necessarily a bad sign, but it's not a strong sign, right? We didn't have another candle really like a big candle moving to the upside. In fact, look at how you can see there was a lot of action to the upside. The selling pressure brought it down. So we're basically closed a little lower than last Friday's candle. Could just kind of be building a base to keep moving up. Usually once they get above, once they're on either side of all three moving averages, either on the bottom side or the top side, it tends to give it a lot of support or resistance to whatever side it's on. So I wouldn't be surprised to see it come down and retest. The other thing we want to be watching out for is we see back here at this time this sector, healthcare sector, it went over the 200-day moving average, and it stayed over it for a little while. Although, see if we can zoom in right in there. Where was that at? We see that it was flirting with it here. And when it broke out here, it quickly kind of went back down. Right now, it's a lot stronger looking than it was back then. So maybe it'll keep moving to the upside. We got this showing us some movement in there to the upside. All right, financial stocks. Financial stocks. Look at that. Oh, looking. That's all this volume in there today to not. Oh, turned red. Look at that. Okay, so not looking good. But what we could do, see how it was green, green, red, red, still moving up, and then we have this big candle. The thing is, though, with here you have this day higher, higher, right? Boom. That's not higher. That's even closed closed a bit lower than Friday's close. Consumer discretionary, basically looking like a doji, touched that 50-day moving average and rallied up a little bit. But we need a little more strength to the upside if it's going to maintain that. Still moving down. Industrials. Industrials not able to, yet not able to break over that 200-day moving average. Turned green though, so that's a good sign there to the upside. Volume's not looking too bad, but could be stronger. IWM, kind of light on the volume, still yellow over here, and got a doji action going on, but it's pushing to that top side. We see that this rallied a bit higher today, but selling pressure pushed it down. Qs, again, we got kind of a doji, but this closed a little lower than Friday's close. Kind of some weak volume. Dollar is up a bit, but it's kind of a doji-ish candle. Not a whole lot of, kind of some weak volume too. 20-year bonds. 20-year bonds. Pulled back just a little bit, kind of on some weak volume. And we can easily see on this line chart, it's pulled back a bit. Out of 5 different sectors that we're looking at. Now they're not the only 5 sectors, but they're 5 sectors that give a lot of influence into the makeup of the S&P 500. This is the only one. Let me double check. Yeah. So this is the only one that's like really bullish. That doesn't mean the other ones can't come around, but we're not experiencing a strong rally to the upside. This is a very weak rally to the upside. And we might not even break out of this channel. We do have the midterm elections coming up, so it's pretty possible that they'll get the president's working group on the financial markets, aka the plunge protection team. It's pretty possible that they could be really ramping up the work of these guys. So the plunge protection team was given to the Working Group on Financial Markets. It was created in 1988 to provide financial and economic recommendations to the U.S. President during turbulent markets. This group is headed by the Secretary of the Treasury, includes Chair of the Board of Governors on the Federal Reserve, Chair of the Securities and Exchange Commission, and it's been coined the plunge protection team. You can go through this Wikipedia article and get a better idea of what goes on, but basically they want to keep the stock market from plunging, right? So it's the president's working group. So the president can request, maybe tell, I don't know how they do it, but it's the president's group. It's a plunge protection team. Maybe they can help keep it from plunging while we go through the midterm elections. Wouldn't you? I would. So we'll see how it goes, but it's looking weak. Oil. We have a small bullish trend here. It's really small, right? Look at low, higher low, higher low, higher low. Now we're over the 50-day moving average, the 20 moving average, over that. It's really been in this range. And we can see lately kind of doing this, and it's kind of doing this. So it's being squeezed together. And I would guess that if we look at, let's look at a bigger picture. I would guess maybe we'll see it pop to the upside. You can really see this V shape here really well. I would guess maybe we'll see it pop to the upside. However, maybe we won't see that until after midterm elections. GOLD. GOLD seems to be building a bit of a base right in here, right? Low, sort of right in the area. It's not even high enough to really be considered high. But overall, we got a down. We're in a downtrend. Maybe it's making a base. Kind of have this. Maybe it was trying to make a W formation here, and it kind of petered out. So maybe it's going to make a M. But it seems to be hanging in there right around the 1600 mark, around 1630, somewhere in there, rallying up to maybe 1660, and then kind of in this, it's been in this range. Bitcoin, the bulls are happy. It is still closing over 20,000 at the moment, on top of that 50-day moving average and 20-day moving average. We see a bit of slowing momentum, right, based on these candles. That's really weak. That's like no one in there. But if it stays in this area, then we have a new, it'll start making this new floor, and maybe that's what happened here. Kind of went in the sideways range for quite a while. Tried to break out, couldn't do it. Kind of built this bottom. But as long as it stays above the 20,000 and it continues to close above 20,000, then I think we could potentially be testing this 22 to 23,000 area. But if we see it break down below, like right now, it's not looking too weak. If it breaks down below 20,000 again and it gets kind of stuck in that range, not sure. I think there's more things at play than just buying and selling with Bitcoin. I think there's some bigger things going on behind the scene that make it difficult to project into the future without understanding this bigger picture. So if I was in a state that gave me enough freedom to easily be able to trade cryptocurrency, for example, Tastyworks has had in the past, I think it still has some feature to be able to trade some cryptocurrencies. And the state I live in, unfortunately, they do not offer me enough freedom in the state to be able to trade cryptocurrency. So I can't easily do it. I know that there's some workaround somehow, somewhere, but I don't want to do it bad enough. It's not a high enough priority. If I can do it somewhat easy in a normal brokerage, then I'll do it. And some states do offer their citizens enough freedom. It just happens to be that this state doesn't. It's not free enough, and so I'm not allowed to do it. If I was allowed to do it, though, I would not. I would trade it, and I would short it. I would go long. The reason why I would do that is because if you can do that, if it's going to skyrocket up, if it's going to skyrocket up, if it's going to rocket to the moon, and you're already long, then you're going to be along for the ride. It's people that don't know how to trade technically that they have to kind of make this decision of like, I'm going to buy and hold them because I don't know how to read stock charts. That's your prerogative, or their prerogative. If you're watching this, you're probably a little more interested in reading stock charts. Even though I don't live in a state that's free enough to be able to trade cryptocurrency, I personally feel that I'm going to allow my fellow human beings enough freedom that hey, if you don't want to learn how to trade stock charts, you don't know how to, you don't want to learn how to read stock charts, then it's totally fine. You shouldn't be forced to read stock charts. If you want to be, if you want to be limited to only be able to buy forever or don't buy, to me, I mean, I was under the impression it's a free country. Obviously, it's not, because I can't trade cryptocurrency. But nonetheless, that's my personal feeling on it. And how I personally also feel is that you need to paper trade. Yep, that's how I personally feel. Paper trade this stuff. Test stuff out. Test your theories, test your understanding, see if it works well for you. If it doesn't work well, then change it. But don't find out it's not working well by losing real money. Lose some paper money. I think the easiest way to get started in trading is selling cash secured put options on a stock that you wouldn't mind owning the rest of your life if you had to. And the reason why I think that is that when you open a position of selling a cash secured put option on a stock that you wouldn't mind owning the rest of your life, whatever happens come your expiration date, it doesn't matter. You win either way. And as long as you're halfway decent at picking a stock, then your stock's probably not going to pull an Enron on you. It's probably going to be around. It's probably not going to do a blockbuster on you. It's probably going to be around. And you should be safe. To help you figure out how to avoid Enrons and blockbusters, go to ifsuccess.com, download this cash secured put stock selection guide. Consider getting this one too. 3 stocks I sell cash secured put options on. They're not the only 3, but they're 3 that I have consistently been selling cash secured put options on for years. And you can download these other 2, but download those things. Watch the playlist that I had a link to at the beginning of this video at 1 minute, and paper trade it. Figure out those steps. Make sure you know what buttons to click. Make sure you understand everything. And then once you get familiar with it, paper trading it, consider talking to the people that give you financial advice, the people that allow you to make decisions with your money. And if you live in a state that gives you enough freedom to be able to do something that you want to do with your money, then by all means, as long as the proper authorities grant you the freedom to do it, you can go ahead and do it. You guys, I hope you liked my Halloween costume. If you could find that in there. Have a fantastic night. Bye-bye.